the new scheme kicks in, and now there are no income caps at all. You can be making $500,000 and you will qualify. The lender criteria regarding borrowing capacity still stays in play. If you don't qualify for servicing purposes, you won't get it. Just if we talk about the 5%, and every lender is slightly different on that. Certain lenders will look at it on the basis that if you've been renting for a property manager, and obviously you can confirm you've been paying rent for 6 months, that rent is deemed as genuine savings. It's a contribution towards.
This is the Build Out West podcast with your host Tony Hyde from Evolution House and Land Specialists and Catherine Smith from Build Bright Builder Brokers.
If you guys are looking to build in WA or simply curious to see what's going on in building, you guys are in the right place. We're here to give insight with professionals in the game, coming to give the inside scoop. Episodes are uploaded weekly, so don't worry, we don't skip a beat and you won't either. Like, share, subscribe, sit back, relax, and let's go. Good morning and welcome to the Build Out West podcast. You're with your host, Catherine Smith, and we have a special guest today. We have Jeremy Whelans from In Mortgage and Finance Services. Good morning, Jeremy.
Great. It's great to be here.
I'm excited to have you on. I've known Jeremy for a few years now. We've done a few things behind the scenes together, but I have been asking him to come on our podcast for a bit now. And obviously being in the finance space, he has got a lot of value, which I think will be really good content for people, particularly who are in WA, either looking at building or buying a service. I think you kind of cross over to both worlds quite well.
Yep.
Jeremy, you will say a bit about yourself, but I think what's great is you have such a knowledge of the finance world, not just in broking, but in terms of how banks works and all the rest of it behind the scenes. So
that's right. Yeah, correct.
In that space.
Yeah, we've got a pretty good macro view of really how the whole landscape's been playing out.
Yeah, it's interesting because every time you talk about work, which we catch up quite regularly about, you see things from different angles.
A little bit of background on me. Obviously kickstarted my career in finance, really in banking back in the mid-'80s. And that's really where I learned my trade. And obviously, we were well trained and had some very good mentors across that journey. And then, that was obviously a lot of fun. Finished in Auckland. So yes, I am a Kiwi, so don't hold that against me. Came in a working holiday in 1997. I'd been in Auckland doing commercial lending and so forth there. When I arrived in Perth, we weren't necessarily going to be here for the whole time, so maybe 6 months, but then we decided, we fell in love with the place and the climate and bits and pieces. It's just a beautiful part of the world. So got this job at Citibank, and obviously that's really what I called my second quarter. And Citibank had a third-party division, and that's where obviously a bank will divide its various divisions into either direct proprietary branch networks or through third-party. They asked me to go work in their third-party area as an area manager, go find brokers to write Citibank product. They had very, very good product for SMEs, so I went out there and found brokers and helped them with the SME type business. So that's where I had a particular target market to focus on. Yeah. So that was really enjoyable, and I think my background in National Bank New Zealand really helped with that. And then after Citibank, I was virtually the last man standing with two assistants, so I was worn out. So aggregation was my next bidding, and Australian Finance Group, I started there in 2004, and I've worked nearly 16 years with them. So obviously really helping brokers grow their business and so forth on that wholesale side of things. So like a helicopter flying over the market, had a pretty good broad view what a lot of brokers are doing. Yeah. And now this is my fourth quarter, and I'm in retail broking and absolutely loving it.
So today we're going to be talking about the Australian Government 5% deposit scheme. What was it called before? What was the name?
It's a home guarantee scheme.
Home guarantee scheme. It's now been rebranded.
Rebranded.
Call it rebrand. So it's the Australian Government 5% deposit scheme.
Yep.
Exciting changes, but there's going to, I guess, disrupt a lot of things as well by introducing that. There are, the way I've looked into it, there are obviously different changes per state. Obviously, we're going to focus more on the Australian changes, both capital city and regional. It will impact. So there's 5 areas that are going to be impacted, and there are changes around that. So let's go through each area, explain the changes, see if that may be relevant to you guys looking at, getting your own place.
Yeah, so obviously the changes kick-start on the 1st of October. They were originally going to be the 1st of January, so they brought that forward. Speaking to the banks, they're obviously getting themselves prepared and ready for it now as well.
Do you know why they brought it forward? What's that about, you reckon?
No, I'm not sure why. It's interesting in the nature of the market, the rising market, and
To be fair, it may be more so in more quieter markets, say like in New South Wales or Melbourne even.
and yeah, you touch on a key point. Obviously, if you look at Victoria right now, the market's been quite challenging and difficult over there compared to some of the other states due to various changes that might have happened in those states, and every state's run differently. So, yeah, Australia's, obviously federal and state governments will determine.
I mean, I think generally, in a nutshell, the changes are going to help people get into a home of their own. Probably not necessarily the WA market because we are booming in a nutshell.
That's right.
It swings and roundabouts, I guess. But yeah, let's go through the changes. Obviously, the income caps have changed. So what were they originally and what are they now?
So previously, single people you were limited to an income of 125,000 and couples 200,000. All right. So that scheme is still in play until the end of this month. And then obviously the new scheme kicks in, and now there are no income caps at all.
Wow, really?
No income caps. So yeah, you can be making $500,000 and you will qualify from an income perspective. Yep.
Yeah, that's crazy because the cap was obviously a huge restriction, particularly in WA with the FIFO culture.
Correct.
A lot of people obviously see over that 200 grand mark, and if you're both working or one was part-time nurse, back in Perth and one was FIFO, then that cap definitely restricted things. So that's really interesting.
Yeah, absolutely, especially here because and you touch on a key point with the FIFO work. Obviously, there can be some decent income households, and that really were prohibited previously.
Yeah.
Yep.
Does that affect both the regional and capital, or just all over?
It's all over. So obviously, like I said, some of the smaller centres will be capped at a $600,000 limit. But obviously, if we talk Perth Metro for a second, then it's properties up to $850,000. Yep.
Okay, cool.
Yep.
What about the scheme places then?
Scheme places, right now there is unlimited scheme places, right? So the banks themselves submit a form through to the federal government in terms of anyone applying for that. So that's where they cover obviously the lender's mortgage insurance. It's on that. So that form is obviously, the banks have that now. They'll actually submit that on behalf of the client. Yep. When an application goes in.
Okay. In terms of choosing the right guarantee, explain a bit more about that.
So there's two. There's generally, I suppose the schemes are broken down. They've simplified it really. Single parent is still there.
Yeah.
My understanding is still a 2% deposit is required.
Okay.
And then the other one is more of a general stream. So that's, a family household, could be dependent kids as well, 2 adults, single persons, whatever. But remembering the single parent is a single parent looking after children. That's the definition there. So that's where they'll qualify at 2%. Then everyone else is at 5% under the general stream. Yep.
So it's making it easier for single parents.
Correct. Yep.
Okay, which is always a good thing.
Oh, no, absolutely. Yep. But the normal lender criteria and all that will still apply, but there's obviously some differences to that.
All right. And what else do we need to cover in terms of that? I think the documentation has changed as well.
No, still the lenders will still submit. It's still in standard criteria instead of checking income and so forth. Yeah. But just if we talk about the 5% deposit that is required and how that's made up, and every lender is slightly different on that. Certain lenders will look at it on the basis that if you've been renting for a property manager, and obviously you can confirm you've been paying rent for 6 months, that rent is deemed as genuine savings. It's a contribution towards.
Is that every lender or just?
No, that's not every lender. Yeah, so that's the whole point. This is why you have to go to a broker because the market's pretty opaque. You can't necessarily go and search all this stuff, that's not available. But obviously us as mortgage brokers, we've got access to all that information.
Yes, but it would have to be through licensed property manager and all the rest of it.
Correct. It's not like you're paying rent to mum and dad.
Yes.
All right. So it's got to be an independent third-party property manager. So obviously it's evidence in terms of rent. So you might have paid $16,000 worth of rent in the last 6 months. All right. But then you might be buying a property, let's call it, $800,000. Obviously there's a 5% deposit on that. There's obviously a shortfall. The remaining of the 5% can be a gift. It could be a family gift.
Yeah. Just
be mindful, it cannot be borrowed money. You can't go out and get a personal loan to top it up.
Right. Okay, it has to be an actual gift.
Because the lender, they will do a credit check. They can see, you just borrowed $25,000 from such and such.
Yes.
They can see that. Where's the money gone? All right. And that looks like it's being used to help you with a 5% deposit, then it won't be accepted.
Yeah.
So, but it could be a gift from parents, as an example.
So let's say it's $850 in Perth.
Mm-hmm.
5% would be
42,500.
That's what we need.
Yeah, that's what we need. But mindful, you've still got your costs, you've still got your stamp duty and so forth as well. So it really depends what you're buying. So if, up to 450,000, obviously an established property, there's no stamp duty. Obviously that has been pushed up slightly recently by the state government. But then mindful of land. Obviously land's captured at a different rate.
Yes.
Yep.
Yeah, I was actually looking to, I know I don't want to go too rogue on this, but I was looking into New South Wales and I think theirs is 1.5 million.
Correct.
Right? Now, with a 75 grand deposit, that's a big loan.
Yep.
And I think it was like $1,800 a week in repayments.
Yes.
And that's something you have to obviously be mindful of is actually your repayments and if you can actually afford that. So that's something you as a broker, you would have to discuss, yes, you can get it for roughly 50,000, an 850 grand house. However, can you service that long term? Is it going to put financial stress on you and your family and what have you?
Yeah.
Correct?
Yeah, absolutely. And look, that's how obviously the lender criteria regarding borrowing capacity still stays in play.
Yes.
If you don't qualify for servicing purposes, you won't get it.
Yes.
All right. So anyway, just to isolate the 5%, like I said, I could be renting for 6 months. I could then get a gift from someone for the remainder for the 5% deposit. Then obviously the other costs I need as well.
Yep.
Technically, you don't even need any savings in a bank account. So by rights, you can qualify. But obviously you might be someone who's actually on good income and for various reasons haven't managed to save any money due to paying high rents and so forth as well. Yep.
But I think the borrowing capacity won't be as big a concern this time around because there's no income cap.
Correct.
Right?
Yep.
Similar to the Key Start scheme where it's income capped based.
Yep.
And that obviously affects the serviceability, and the borrowing capacity on that.
Well, it's obviously serviceability. Key Start will have a certain criteria of as being a government agency. They're not typically like your commercial lenders.
Yeah.
So obviously they had a capping in terms of they're there to help that low income type household.
Yeah.
They're not really designed to help someone who's earning a large income. So that's not really their target market.
Yeah.
So they're there to support. So you've got to understand that they're focused in a different area. But otherwise, getting back to your mainstream banks sort of stuff, they will assist, obviously, as long as that borrowing capacity still services.
Yeah.
And us as brokers, we actually have to go through your living expenses. We still got to look at that stuff and go, hold on a second, you're spending all this money on downloading UFC fights at $50 a pop and you got to stop that. So, at the end of the day, we might need to change some of the discretionary spending that's going on. And we see all different types. Banks work on an average household, but I see the frugal household, I see the lavish household. Yeah. All right. So with the lavish, we've got to really nail down and focus. What are you doing to change that sort of stuff? Because I certainly don't want to put a client in a position at the end of the day they're going to struggle to make their loan repayment.
I know a question I'm going to get a lot, so let's just answer it now. Can you withdraw your super and use as part of your deposit?
Yes, you can. Obviously, there are some criteria around that. Okay. So it depends on which side of the financial year. So obviously, they might have made contributions in the financial year just gone.
Yes.
And then you might have just made another contribution to your super fund because that's part of the super scheme. Then you can get access to that. And that's obviously will assist you with a deposit. Yep.
This is interesting, maybe one to explore later. But I definitely know, we'll just use FIFO as an example where they are high income, but generally speaking, low savings.
Correct.
Right?
Yep.
Not because they have problems spending money, it's just more so they're mainly the breadwinner. The wife stays at home with the children. So, in terms of a household of four, their savings doesn't go very far. No. However, they do have a good, super balance and things like that.
Yep, correct. Absolutely. So, that could be an option that they can look at that as well. Yep.
Is there a time frame going to be on this, or we don't know yet, I guess?
No, that's like I said, there's unlimited places. So they'll just go.
I think that's also what's quite confronting because as we are in Perth now, things are just crazy as they are. Is this going to affect the market? I think yes.
Yeah, has to.
You would have to agree with me there.
It's, yes, obviously based on the amount of stock that's available to buy sort of thing. Yes. So, yeah.
And I think particularly anything sort of which is a tough market as it is, anything between $650 and $850 as it is now, it's going to be even more cutthroat into, pushing those sort of houses, an extra 50 60 grand.
Absolutely.
Under offer, you see a house for 700 grand, it will go for 750 just because the competition in that
Absolutely, it's going to heat up.
very, very aggressive. Yes.
Yeah, absolutely. Yeah.
So
Yeah. So it'll be interesting how that plays out.
it will be, and I think it's exciting for people that obviously don't have that deposit and want to get into it.
And that's the positive. It does help someone get in there, but obviously, they are going to need some other help to help that in that journey to get that. And it's not just a matter of they're qualifying for a loan, but they need other parties and so forth, even like your own services to help.
Keep in mind, this is obviously for established and for new home builders as well in Perth. If you want to know more, I will put Jeremy's details below and you can contact him for more insight. But he's already rolling it out with a few clients as well. And by October 1, it's going to be more and more coming through for the end of the year. So thank you for jumping on board today.
Not a problem. Been a pleasure.
Remember, like, share, subscribe, all the good stuff, and look forward to your comments. Goodbye.
This is the Build Out West podcast with your host Tony Hyde from Evolution House and Land Specialists and Catherine Smith from Build Bright Builder Brokers.
If you guys are looking to build in WA or simply curious to see what's going on in building, you guys are in the right place. We're here to give insight with professionals in the game, coming to give the inside scoop. Episodes are uploaded weekly, so don't worry, we don't skip a beat and you won't either. Like, share, subscribe, sit back, relax, and let's go.